get it. So let me start sharing my screen. Okay, I believe you guys can see my screen now. I've opened the paint app. I believe you guys can see the screen. So as I mentioned earlier, we are going to look at support and resistance this evening, and then we are going to go into details. We are going to go into details. So if you do not know anything about support and resistance, kindly mute yourself if you are here. Mute yourself once you join, not to distract others. Kindly mute yourself if you are here. Mute yourself once you join. Kindly mute yourself once you join. And then yesterday I okay support. Yesterday I gave a definition on support that support is when a rising market stops, returns, and then changes direction. When a rising market stops, changes direction, begins to begin to fall. When a rising market stops, change direction, and then begin to fall, that's where we have a support. And then resistance is the opposite. Resistance is where a falling sorry I'm confusing you guys. Let me give you the explanation again. So currently I'm explaining what a support is. So a support is when a falling market stops, changes direction, and then begins to rise. When a falling market stops, changes direction, and then begins to rise. And then resistance is the opposite. Resistance is the opposite when a rising market stops, changes direction, and then begin to fall. When it stops, changes direction, and then begins to fall. So let's look at this example here. So now let's take this as an example. I explained support that when a falling price stops, changes direction, and then begin to rise. So we have this particular point, we have this point as well. We have this, we also have this here. So based on the explanation I just gave, this would be our support
Yeah, sorry, sir. You are not recording.
I'm recording. Can you hear me? I'm recording.
Okay, sir.
Yeah, I'm recording.
You can hear you, please.
Okay. So based on the explanation I just gave, we have our support and resistance here. So just as I said, when a falling market, so if you can see my cursor moving, when a falling market, so market started from this particular point and then it started dropping. It got up to this particular point, it stopped over there and then began to rise. So it's when a falling market stops, changes direction, and then begins to rise. That's where we have our support. And then resistance is the opposite when a rising market. So market going up like this, or market going up like this, stops here and then begins to fall, that's where we have our resistance. That's where we have our resistance. So let's now move back to the let's now move to the real market. I've already explained here. I've drawn how it's supposed to look like. But then when you visit the real market, this is not what you are going to see. You won't get it as smooth as you see it on this paint app. I'm making it look nice for you to be able to understand it. But then when you visit the real market, this is not what you are going to see. Even though the candlesticks will be moving up and down, this is not how you are going to see it. As you see, so these ones represent, can you mute yourself? Mute yourself once you join.
Chris, you are not recording. Chris, it seems you are not recording.
I'm recording. I don't know how you determine to know whether I'm recording or not. But then I have it on. I'm recording. I have the recorder on. I have the recorder, so it's being recorded. Can I proceed?
Yes, please.
Okay.
Sure.
Okay.
Yes.
All right. So let's just proceed. So this is how I'm representing the candlesticks. I just draw them with these lines, but then when you visit the real markets, you and I know that you are not going to have it as smooth as it is here right now. So let's now go to the real markets to see how it will look like when you want to identify your support and then your resistance. Okay, so I hope you guys can see my Meta 5, the MetaTrader platform.
Yes, please.
Okay. So we are going to look out for a few examples here. So just as I said, when you visit the real market, you won't get it as smooth as you see it on the paint objects I just drew them. It's very rough when you visit the real market, but if you understand how this thing moves, if you understand how it behaves, it's very simple to identify them. So let's go back to the explanation I gave. I said support is when a falling market stops, changes direction, and then begins to rise. So this is a falling market. Market was moving all the way from this particular area and then moved down here. So let me indicate them with these lines. No, it's too small. So I'm marking them and then we are all going to participate. We indicate whether they are supports or resistance that I've drawn. We are all going to participate. So if you are here as I mark them, you are all going to help us understand. For the people who do not understand these things, we are all going to help them understand. So let me just mark these ones and then we are going to indicate whether they are support or resistance. And we all know that sometimes support becomes a resistance and then resistance also becomes support, and that's where we have our flip zones. That's where we have our flip zones. So just as I said, on the paint app, it was very smooth. it was very smooth because I drew them with just some straight lines, and then we could simply identify the swing points. So if we say a support is when a falling market stops, changes direction, and then begin to rise, let me just use these arrows. So here market was moving all the way down here. Market moved all the way down here, and then it stopped at this particular point. It stopped at this particular point, and then it went up. It went up, and then when it got here, it stopped again. When it got here, it stopped again, and then it started falling. It stopped again, and then it started falling. It fell up to this particular area, and then it went up again, and then it went up again. So here we have supports and then resistances over here. We have our supports and then our resistances over here. So this would be our resistance based on the explanation I just gave. But then if you don't understand anything, you can just comment in the chat box. You can just comment in the chat box. If you also think I'm doing something wrong, you can equally comment in the chat box. So this would be a resistance, and then we would have a support somewhere here. Oh. And then you have a support somewhere. So this is a resistance. This would be a support, but then this was once a support and then later became a resistance. It later became a resistance. So this is also another support. We have other resistances over here. This is support. This is a minor resistance because we have this particular resistance here, and then if we are to draw another resistance up here, we can also have this at the top here. So this would be a minor resistance, and then this would be a major resistance. So we can have major and then minor resistances and then supports, either levels or zones. And then anytime you are trying to find out support and then resistance, you should have it at the back of your mind that you are not just looking out for lines. You are not just looking out for trend lines. You can actually have zones. You can equally have zones, not just the lines or maybe some numbers. You can also have zones. So if I'm to draw a zone down here, this is how it's going to be. I won't just use a line. I can use the rectangle to mark this whole area as a zone. So anytime market enters this particular zone, I know say I can find an opportunity here. If it supports, we all know that we buy as support, we sell as resistance. But then it's not always the case that you need to, once you see support, you need to buy. Once you see resistance, you need to sell. So guys, please, there's something going on here. I am going to show you something right after the call. As I talk now, I'm making about 300 USD on a real account. I'll be posting it on the channel for you guys to see how accurate we are, and then we are going to give you everything we know, everything we've learned, experience we've gained. We are going to give them to you for free as Dr. Captain Quay started, and then I'm also on board to help you guys understand few things. So if you are here, you can just check on the channel. Is it a group or a channel? You can just check. I'm milking the markets as I'm on the call explaining things to you now. I'm milking the markets. I'm making so much money in the markets right now. So let me just continue. We have our supports here, and then we have the resistance levels over here. Please, if you don't understand anything, you can unmute yourself or you can type in the chat box. People are still talking about this recording thing. So after the call, I'll just drop the video on the channel. I'm recording, so I don't know why people are still saying I'm not recording. So right after the call, I'll just post the video in the group for you guys to have it. Yeah, somebody is talking.
Yes, I want to talk about the recording. That is why.
The recording.
Yes, sir.
Okay, okay. All right. So can
Cinema,
I?
continue. You continue. It's like when they join, they don't hear anything like your
Ah,
your meeting is being
okay.
recorded.
Okay. I now understand. Okay, I get you guys now. So I'm recording right after the
Uh,
call. I'll drop the video on the page for you
you
guys. Yeah. So now we've seen few support and resistance levels over here. We've seen few support and then resistance levels over here. If you just join, you can just go back to the page and then see how I'm making the markets right now. Yeah, media broker. We are here to kill the market. So now let me take step index also. So step index, as you can see here, I have this zone over here. So I know that here markets reach based on the explanation. So I'm giving the example based on the explanations that I just gave you. Based on the explanations that I just gave you. So I am marking my support down here, and then I have the resistance over here. We can also talk of demand and supply, but we are not dealing with demand and supply as it stands now. We are only looking at support and then resistance. You're only looking at support and resistance. So if you see maybe demand or supply, you can just keep that. But for the sake of this evening session, I am just looking at support and then resistance. So I said yesterday that if you are drawing your support or if you are marking your support and resistance levels, if you don't take
What
care,
support stop?
hello, come again.
Yeah, Chris, continue. Once you are done and they have questions, then they chip in.
Okay,
Those who are joining with background noise, please, once you join, mute.
Okay, let's proceed. So yesterday I made mention of you getting a wrong entry if you don't get your support and resistance levels or lines or zones drawn correctly. If you are picking a trade based on support and resistance and then you don't get either your line, your zone or your level correctly, if you are supposed to go for a sell, you rather go for a buy. If it's a buy, you rather go for a sell just because you didn't get the level or the zone or the line drawn correctly. So if you don't do it right, it means that you are going to pick a trade which will end up making a loss for you. So you need to make sure you draw your support and then resistance levels very well. Tomorrow, God willing, when we meet, we are also going to talk about trend lines where you can actually draw your support and then resistance with trend lines accurately so that you don't end up picking wrong trades. So that you don't end up picking wrong trades. So now let's look out for few support and then resistance levels over here, and then after this we will know we will check or find out how to know when a trend is being or support or resistance is being violated or when it's been broken. So you see, when you are trading based on support and resistance, you should be able to know that whether the trend is still valid or not, whether your support is valid, whether resistance is valid. Because I made mention that if support gets broken, it becomes resistance. If resistance gets broken, it becomes support. So you
Bye
need to make sure if you are trading on a support, you need to make sure whether the support is valid or not. If you are trading based on resistance, you need to make sure whether the resistance is still valid or not. This is what you need to check. This is what you need to check, and then you'll be able to identify whether it's valid or not when there is a breakout. When there is a breakout, and mostly people tell us that if you want to find out or if you want to confirm whether support or resistance is being broken, then there should be the candle that you are using to confirm should break below either your support or resistance. Either your support or resistance. And then you and I know that this is not always the case. In most cases, you will see that the candlestick will actually close either below your support or resistance, but markets will still come back to the opposite direction. let's assume it breaks support, you are expecting it to maybe come and then retest or maybe continue with a sell because support has been broken. But it's not always the case. In most cases, the support will get broken, the candlestick will close below. Yes, so markets will return and then buy, and people lose a
Please,
lot
we
of.
can't see your screen.
Yes, I'm moving from MetaTrader to the Paint app, so I'm going to share it right now. Yeah, so sometimes we trade because support, sorry, candlestick. Please mute yourself once you join. You are distracting. Kindly mute yourself. Okay, so sometimes I was saying that sometimes even though support or resistance will get broken, but then markets will still turn and then go the opposite direction. It will still turn and then go the opposite direction. So let me have an example here, and then let's use this as our candlesticks. So let's assume market moves down like this and then moves again like this. So when market gets here, this is our support. When market gets here, we expect it to return. When market gets here, we expect it to return. So mostly we pick buys on support. Yes, if you do that, you're not wrong. Yes, if you do that, you're not wrong. So if you want to pick a buy here, or if you want to confirm that whether market has been broken or not, or whether support is being broken or not, we expect the candlestick to close below. That's what people tell us in most cases. We all expect the candlestick to close below like this. And once it closes below, let's assume it's on H1. Once it closes below, yes, people will start saying that, oh, they have been breaking market structure, so now I can sell. And people will be waiting for retest. Others will not wait for retest at all. They will just sell. And whether you wait for retest or not, if the breakout is fake, if it's a fake out, trust me, whether you wait for retest or not, you are still going to lose money. If you pick trade based on that, you are still. So sometimes it happens like this. So we expect market to go down. Once support has been broken, we expect it to continue going down. But then in some cases, you see markets will turn, instead of going down, it will turn and then begin to go up like this. It will turn and then begin to go up like this. So let me just use this to make it very clear to you guys. So let's use this as our trend lines. And then market moves like this. Moves like that. Like this. Like that. So here we all know that this is our supports and then this is our resistance based on the explanation I gave. So once markets breaks through the support or maybe a resistance, here we all confirm that this is a breakout, and let's assume this is H1 and then the candlestick ends here or maybe closes here. We all assume that this is a breakout, but then sometimes even though candlestick will close below the support, it will still behave like this. It will still behave like this. It will still behave like this. And people will be like, oh, the broker is manipulating the market is being manipulated. Nobody is manipulating the market. The reason is that you do not understand certain things. There are certain things you've not understood yet. You've not consumed certain information that will help you know that yes, it's being broken or not. You've not consumed that information yet. So when you see things happening like this, all you say is they are manipulating the market. But then let's ask ourselves this question. If I see markets, if I see this as a breakout, and then this becomes a retest, I will sell here. If I'm selling here, there are other people who are also buying here. So let's assume that Deriv decides, or any broker that you are using, if the broker decides to manipulate the market. If it's supposed to sell and then the broker say that, okay, then let's push the market up. Do not forget that even though they are pushing the market up, you going for the sell, you are losing. What about those going for the buy? Are they not winning? So certain times, even though markets misbehave sometimes, but then it's not all the time that we can blame the brokers, the brokers, or maybe we can blame the markets. There are certain things we need to understand. So for you to confirm that yes, there has been a breakout, for you to confirm that yes, there has been a breakout, you need to understand few things. So you can just jot down these few points. I'm going to give you like 2 or 3 points for you to be able to know that indeed there has been a breakout. So first you need to understand is that market or the candlestick needs to close below either your support or your resistance. Market needs to close below it, either your support or your resistance. Market needs to close below it. And once it closes below it, trust me, that is not a confirmation. Even though the confirmation has started coming, but then that's not 100% confirmation for you to go into a trade. It's not 100% confirmation for you to go into a trade. So once that candlestick you are waiting for closes below your support or closes above your resistance, you still need another confirmation. You still need another confirmation for the next candlestick that is going to develop or build up. So let's assume you are on H1 and then currently it's 8:02 p.m. GMT, and then a candlestick closes below this support. This is our support. Let's assume that a candlestick closes below this support. A candlestick closes below this support over here. And then now it's 8. So let's assume this candlestick started forming at exactly 7 o'clock. Now it's 8:02. So a new candlestick is forming. This has closed. It has closed below your support. Yes, there has been a breakout. But for you to confirm, not to be fooled by the market, sorry to use this word, not for you to be fooled by the market, for you to confirm, you need to wait for the next candlestick to also form, develop, and then close. And then this candlestick needs to have these features. The next candlestick should be smaller than the candlestick that broke through either your support or your resistance. The next candlestick that will help you confirm should be smaller. It should be smaller than the previous candlestick. So if you are using this candlestick, the next candlestick, it should be smaller, maybe like this. It should be smaller than the candlestick that broke through either your support or your resistance. You need to wait for this candlestick to also close, and then it should close below the previous candlestick that broke through either your support or your resistance. So let me just use support because I'm using support here right now. So let me just maintain the support. Either support or support, it's the same thing. So we are using support right now. So this candlestick broke through your support. That's not a confirmation for you to go into the trade. You need to wait for the next candlestick to also form and close. And then these are the features you need from the next candlestick. So you need to make sure that candlestick is smaller than the previous one. And then it should also close below where the previous candlestick ended. It should also close below it. And then once you get this, it's a confirmation for you to go into the trade. Either you wait for a retest, depending on which structure you are trading on or which pattern you are trading with. Depending on the pattern you are trading with, so you can either wait for a retest or maybe you can just go in directly. Because certain times markets will break out and then there won't be any retest. We have about 2 minutes for this meeting to end. Once it ends, there will be another link, so you can just go back to the channel and then join again. Once it ends, you can go back to the channel and then join again. So when you wait for this candlestick to close, you need to wait for another one to also close. It should be smaller than the previous one, and then it should also close below. It should also close below. So anytime you want to draw these things, you want to get your support and resistance accurately, I would advise you first go for line charts. I would advise you first go for line charts. So before I go into the line charts, few features about a breakout candle. The candle should be a full body candle. It means that this candle shouldn't be a doji or a pin bar. It shouldn't be a doji or a pin bar. I'm talking about this particular candle. So the candle that you are waiting for it to break either your support or your resistance, this candle shouldn't be a doji and then it shouldn't be a pin bar. You need to have a full candlestick like this. A full candlestick like this, something giant like Burna Boy. So a full candle like this, and then the next one can be smaller than the previous candle that broke through. So currently we have less than a minute. We have less than 1 minute. Let me just end this so that. Okay, so somebody was asking in the chat box that which time frame should we use to confirm the breakout. So this one depends on your style of trading. It depends on um, whether you are going for swings, maybe you are doing day trading, you are scalping. But then I would advise you would always trade in favor of a trend. If it's in an uptrend, make sure you are looking out for buy opportunities. If it's in a downtrend, make sure you are looking out for sell opportunities so that you don't find yourself being stuck or you don't find yourself being kicked out of the market. So with a time frame, personally, anytime I analyze the market, I use daily H4 and then sometimes H1. But when I'm making an entry, when I'm picking the trade, I need to make sure I switch to the lower time frames, maybe 15 minutes, 5 minutes, 1 minute. You can have an entry on a higher time frame, maybe H4 daily, but then you need to switch to the lower time frame to know whether there would be a pullback somewhere, whether in a smaller time frame, maybe it's in a downtrend. We can have an uptrend on H4 and then a downtrend on maybe 5 minutes or 1 minute. We call this trend within trend. So if you look at the bigger picture, you always have to look at the bigger picture. So daily H1. But then if you want to trade based on a daily candlestick and then you are waiting for maybe a breakout to occur somewhere, unless maybe once you visit the market, you see that okay, there has been a breakout somewhere here. But if you are waiting for a whole day, 24 hours for a breakout to happen, it means that you are going to have few trades. So you can just look out for maybe H4, H1, but do not ignore the higher time frames, daily, weekly. Personally, I don't trade with, I don't do analysis on weekly. It's daily H4. But then if you are going for swing trades, if you want to milk the market for a while, for a longer time period, you can look out for the higher time frame, the monthly, the weekly, the daily. Yeah, so let's continue. So I was saying that the candlestick that would help you confirm that there has been a breakout is the next candlestick after the candlestick that breaks maybe the support. Let me use the support. And then this candlestick that is breaking out, it shouldn't be a doji or a pin bar. And then when we say doji, let me explain, let me take you to what a doji is. A doji is it's a candlestick that looks like a cross. It looks like a cross, and then the ends or the closes, the opening and then the closing are equal or they are almost the same. They are equal or they are almost the same. Almost, they are almost the same. So let me use this as a candlestick, and then you can have something like this. It looks like a cross. You can have something like this. You can have something like this. This is a doji. And then this candlestick that broke through the support, it shouldn't look like this. The candlestick should be a full candlestick. It shouldn't look like this cross. It shouldn't look like this cross. So this particular candlestick, the doji, it's a signal to determine that price will soon undergo a reversal or maybe a bearish reversal. It's a signal for traders to determine that maybe price it might soon undergo a bearish reversal. So this candlestick that is breaking through your support or your resistance shouldn't look like this. And then it shouldn't also be a pin bar. It shouldn't also be a pin bar. So let me show you how a pin bar looks like. Let me show you how a pin bar also looks like. It can equally look like this. So we have bullish and then bearish pin bars. We have bullish and then bearish pin bars. So this is a bullish pin bar, and then the other side or the opposite would look like this. Please take it like that even if it doesn't look nice. You just need to understand it. Even if it looks very smooth here, when you visit the real market, you won't get it like this. So this would be a bullish pin bar, and then this is a bearish pin bar. So this candlestick shouldn't look like any of these guys. It shouldn't look like any of these guys. If you want to have a real confirmation, it shouldn't look like any of these guys. So now let's proceed. So now let's go back to, I made mention of you switching from candlestick to um, line charts, and then I'm going to give a reason why you can actually switch from candlesticks to line charts for you to get things clear. You can actually switch from the candlestick to line charts. So after getting it on the line chart, then you can maybe switch back to your um to your candlesticks. You can switch back to your candle. So let me check the chat box if there are any questions in. Okay,
Yes, sir.
so there are no. I have
Hello, sir.
problems. Yeah, I can hear you.
I said on how to get the confirmations. He said on lower time frame. How will we know that he's going to? How will you get the real confirmation? I don't really get the confirmation, sir.
How do you get the real confirmation that whether a market, maybe your support has been broken or not?
No, that whether whether it's going to go bullish, and which is maybe the support is going to hold or not.
Yeah, so that's what I just explained, that for you to confirm that you see, we have the real breakout and then we have fake out as well. We have the real breakout and then we have fake out as well. Sometimes markets, okay, so let's look at this. Let's look at this here right now. I hope you all can see this candlestick over here. We all can see this candlestick over here. So this would be a support. Let me reduce the size.
Yes, sir.
So you see this is a support over here, right?
Yes.
Yes, this is a support over here. And then based on the explanation I just gave, the candlestick that will break through the support should be a full candle, right? Yes, and then the next
Yes.
candle that would also form for you to for the main confirmation, the next candle for the main confirmation should be smaller than the previous one that broke through the support or the resistance. And then it should also close below the previous one. It should also close below. So this was the candlestick that broke through the I'm coming.
Please, can you come again?
The explanation I just gave.
Yes, please.
Yeah, I was saying that for you to confirm that there has been a breakout. So this is a support. I believe you can see the screen. This dark line, the black line over here, represents a support, right? And then if we have support like this, in most cases, we buy on support, we sell at resistance, right? So once market is here, we tend to buy. And then sometimes too, we also wait to see whether there would be a breakout or not. Currently, we are trying to understand or know when a support or a resistance has been violated. It means that it's no longer active. Because for you to be able to pick trade on a support, you need to make sure that the support you are picking trade on is still valid. So how do you determine, how do you know whether this support is still valid or not? And that's what we are looking out for right now. And I know most of you know that for you to confirm that maybe support has been broken, the candlestick should pass through the support and then close below it. It has to close below it. And in most cases, or maybe in some cases, even though a candlestick can pass through the support, closes below it, yet market still goes up. We know that if market breaks support, it has to come back, retest, and then go down as a sell. The sell has to continue again like this. Once market breaks out, we expect it to sell like this. And but in some cases, the candlestick will close below the support or resistance, but it will still go back to buy. Because once it has been broken, we expect it to sell. If support gets broken, it now turns a resistance. And we know that we sell at resistance. So if support has been broken and it has been turned to a resistance, or maybe a flip zone has occurred, then we expect market to sell. But look at this particular market over here, where the cursor is moving right now. Even though this candlestick closed below the support, yet market went up. A very strong buy. So if you sell here, it means that you are making a very huge loss. You are making a loss over here. So for us to determine whether the breakout is fake or not, that's what I just explained, that yes, the candlestick has to close below the support. But that's not a confirmation, that's not a full confirmation. There should be another candlestick that should form and then close below the previous candlestick that broke through the support. So we have this candlestick over here. We have this candlestick over here. You see, it went all the way down here. And somebody will say that, okay, since we expect it to close below this candlestick, once it has gone below it, then it means that it has been confirmed. But look at this, the candlestick didn't close below the previous one. The candlestick did not close below the previous one. It went up. So here we are looking at H4. It went up, it didn't close below it, it closed above where this previous candlestick ended. So it means that this breakout is fake. So this could be termed as a fake out. So if you pick a sell based on this, that's a mistake. You are going to lose the trade. Is it clear? If you pick a sell based on this, it means that you are going to lose the trade. So let me just go back to the line chart that I mentioned. I said I was going to explain why you can plot your chart on a line chart on a line so that you can get your support and resistance, either lines or zones, drawn carefully so that you don't end up going for the wrong direction. So you can actually change from candlestick. You can change from candlestick, this is candlestick. You can change from candlestick to line charts. And then the reason is that with line charts, it only shows closing prices. It only shows closing prices. But with candlesticks, it shows the closing prices and then the highs and the lows. It shows the closing prices, the highs and the lows. So let me take you back to the paints and then let me explain to you where if some of you if you already know this, I believe it will be boring, but then for the sake of people who do not know about this, let me just explain it for those who do not know about it to also understand it. So let me just take you back here. So now when I mention the close and then the highs and then the lows, let's take this as a candlestick. Let's take this as a candlestick. It's very strong. And then we have these wicks over here. And then there is another wick over here. So this is a candlestick. We have a wick over here, another wick over here. So from this whole area, from this whole area, you see, from this whole area, let me delete it. From this area, this whole area, kindly ignore the down one, but then from this whole area, let me mark it again with a different color. So this whole area would be the body of the candle. This is the body of the candle, and then this is depending on the kind of candlestick, whether it's a bullish or a bearish, whether it's a buy or a sell. So let's take this candlestick as a bullish candle. So this would be the open of the candlestick. This is the open. This is where market started from. This is where the candlestick started forming. So this is the open of the candlestick, and then this is the close of the candlestick. This is a bullish candle. So it started forming from here. It went all the way up here. And then it closed down here. So it means that if a different candlestick is supposed to form, this is where the other candlestick will start forming. This is where the other candlestick will start forming. So we have the open and then the close. This is the open, this is the close. And then we also have the highs and the lows. We also have the highs and the lows. So if this is the open, then it means that this would be the low. This would be our low. This would be our low, and then this would be our high. I believe this is clear. Sorry, this is clear. So this whole area will be the body, and then this will be the open, the close. This is the low, and then this is the high. Give me a few minutes, let me connect my charger. Just a few seconds, not even minutes, few seconds. Let me connect.
Please, are you recording it?
Hello, Chris. Hello, Chris. Right, guys. I hope you can hear me.
Okay, I'm back now.
Yes, sir.
Yes.
I'm so we can't
Okay, it seems
proceed now.
his network
Yes, sir.
is right. But I hope so far what he is teaching, you are cool with it.
Yes,
Yes,
sir.
sir.
Yes,
Yes,
please.
please. Yes,
Yes, we.
please.
Yes, boss. Yes.
Yes,
Right.
yes,
Yeah.
yes.
We are following.
I'm expecting people to follow it carefully. Once he is done, you will not come. You should see some changes in us. Are you getting me?
Yes,
Yes, I get
please.
you.
Yes,
Because
sir.
as we speak now, in as much we are teaching you guys, we are expecting you people to also be making some profits in the market, not only in the forest industry. Any any concept that we will be taking you through, or any business that we will be teaching you, should have a foundation or a feel of forest in it. So once you have the knowledge about forest, if someone introduces any business opportunities surrounding forest, you'll be able to talk in that forest language. You'll be able to digest as well. That is why you must take this course very, very serious. You understand, or we do understand, you have other businesses that you are doing. But if you should take forest seriously, I bet you will now appreciate why banks are making a lot of money. Yeah, Chris, are you on the call, Chris?
Yeah, I'm here.
Hey, is Chris on the call? Yeah, Chris is on the call. It seems going for it. I have to do the recording.
Yeah, I'm
Chris, are you on
here.
the call?
Yes, I'm back. I'm here.
Okay, you can go through.
Okay. So I've explained to you what the open of a candlestick is, what the close is, what the high is, and then what the low is. So now, if I say that you should use a line chart in a sense that line charts, kindly mute yourselves. Please mute yourself if you're on the call. Kindly mute yourselves. So I was saying that line chart only shows closing prices, whilst candlesticks add the highs and then the lows. So sometimes if you are not very careful, you'll be confused and then you draw a line you yourself, you won't understand it. And this mostly occurs when people are losing trades, they can draw
Master,
lines anyhow. When people are losing trades, they can draw lines anyhow. Even though they know say this thing they have that's not the right channel, but then since they are losing the trade, they will be drawing it anyhow, forcing the market to obey their charts. So now let me pick step index here. This is my favorite. This is one of my favorite pairs. Then I'll be milking it day in day out. People should stop calling. Oh. Hello, can you please see my screen? Can you see the screen now?
Yes, please.
Okay,
Yes, sir.
so okay, you can mute
now
yourself,
let us not
please.
help us.
Chinamo lectures and Okazas. Wednesday is here as a kind of the young man. And
Please mute yourselves. Mute yourselves for me,
prepared
please.
for exams. The company.
Okay, so now I have the line chart over here. Let's use the line chart to mark few supports and then resistance lines or levels or zones. Let's use them to mark few ones. So if you can see the screen, if you can see the screen, let me just delete this. Kindly mute yourself. Kindly mute yourself. Mute yourselves, please.
Please, are you recording it?
Yes, sir. I'm recording.
Okay, thanks.
Okay.
Thanks.
Okay, so I'm using the line chart to mark few ones. Then after that, um I'll just switch back to the candlesticks. Then we see, then we look at them whether it will be clear on the candlesticks, and then how it's going to look like on the candlesticks. How it's going to look like on the candlesticks. So now I'll switch to the line chart, and then I am marking few ones. Then I'll switch back to the candlesticks. Then we check out whether they also behave nicely on the candlestick side. So let me just mark a few and I believe you all know that support and resistance, they are mostly not, if you are just using trend lines, you won't always find them on a straight line. You won't always find them on a straight line. You won't always find them on a straight line. So let me switch back to candlestick and see how these ones will look like. So let's take a look at this. Let's take a look at this particular one where my cursor is right now. And then it's on the candlestick right now. Let me go back to line charts. So you see with the line charts, it's just below this one, right? It's just below this price, and then this one is also here. So here it's very, very clear. It's very, very clear. Just as I gave the reason why you should use the line chart, or the reason why you can use the line chart, is because the line shows only the closing prices, only the closing prices, whilst candlestick shows the both the closing, the highs, and then the lows. So if you are not very careful, you will mark where you are not supposed to mark. So you can see here the candlestick actually cross this line, and then this is, I believe this somebody lost a trade over here. Somebody picked a sell over here. So this is one of the reasons why you can switch from candlestick to line charts to mark your support and resistance, to mark your support and then your resistance. So if I go back to line charts, we could see that it marked exactly where the market turned. But when you straight to candlestick, we have something here. We have the wicks over here. And then if you are not very careful, a simple fake out will let you lose a trade. A simple fake out would let you lose a trade. A simple fake out would let you look at trade. And then if you look at this resistance over here, the same thing happened here. So you see the line is just on top of this line over here. The trend line is just on top of this line chart over here. But then if I switch to candlestick, you see we have the wicks entering the trend line. We have the wicks entering the trend line over here. So if you have the line chart, it makes it very simple and easy for you to identify them. It makes it easy for you to identify them. So this is one advice I'll give you if you actually want to, if you want to draw your support and then resistance very well, you can use the line chart, and then when you are done, you can just switch back to your candlestick. But then if you still want to stick to candlesticks, then in most cases you can just use zones instead of just using trend lines. Instead of just using trend lines. So you can pick a rectangle, then you mark it like this. So you know that whenever market enters the zone, so here you don't just have a line or maybe a level, you have a whole zone. So you know that whenever market enters the zone, you have either your potential buy or sell. You have either your potential buy or sell, either your potential buy or sell. And then there's one key thing I want to inform you to. I believe some of you know, but then those of you who do not know, anytime market hits a particular level, either a support or a resistance, several times before it breaks out, it means that that particular support or resistance is very strong. It means that it's very strong. And then if market is able to break through it, the same strength that the support or the resistance had, the same strength will be used to move the market. And I'm going to give you an example on a setup I did, and I even shared this particular setup for people to. I don't know if a lot of people picked it, but I believe some of you who had this setup picked the trade, and then you actually make few points on it. So we have this particular zone over here. We have this particular zone over here, and then we can see this consolidation here. We can see from this area where I'm marking, from this area, market struggled a lot. So if I'm to mark, if I'm to move this here, this is what I'm going to have. So market struggled a lot down here. So let me just push it back. I made mention of a flip zone, which we have one over here. So market struggled over here, and then when it finally went up and then came down, when it finally moved out of this particular zone, when it finally moved out of this particular zone, you see how it came all the way down here. So the strength that this particular resistance had was used to push the market down here. And earlier on, I said that if support breaks, it becomes a resistance. If resistance gets broken, it becomes a support. We have an example here. Let me just push. Let me put this back here. You see, this whole area was once a support. If you are taking this and then this into consideration, this would be a resistance and then this would be a support. But once it gets broken, if support gets broken, it becomes a resistance. And if resistance gets broken, it becomes a support. So this zone was broken, this zone was broken, so it came. Let me just switch it here. So here it was a support, but when it got broken, it became a resistance over here. It's a support here, and then here it's a resistance. That's where we have a flip zone. That's where we have a flip zone. And I gave a setup on this particular, I shared this particular setup, and then I indicated with this arrow down here that market was going to go all the way down here, even though it didn't go as expected, but then the target got hit. And if you understand how this market behaves, once you have the setup, you need to have hope in it, not just hope. You need to believe the setup that you've had, because that's the skill, that's the knowledge you have. Once you have the setup, you need to be confident in it, and then you can pick your trade and then hold it. Even though I picked the trade here, it didn't go direct, but then it went up to the same zone and then strongly moved down here. It strongly moved down here. So I made mention of you switching from candlestick to line charts, switching from candlestick to line charts. So now I've moved from candlestick to line charts. Let me delete this one. Let me delete these ones. Let me delete these ones. So you see here, I had it very smooth. I drew the zone from here. So if let me just push this a little bit up. So I am marking just the tips, the obvious ones. So this is an obvious swing point where markets returned. And then there was another one here. So I stretched this all the way to this particular area. And you see where the market reversed. But then when you switch to candlesticks, you won't get it as smooth as this. It won't be very smooth. So for you to be on the safer side, I'm not saying you should change your trading style. No, this is just an add up to what you know. And I believe some of you already know this. But for the sake of those who do not know this at all, you can actually switch from candlestick to line charts, and then after marking your zones or your levels, maybe you can go back to your candlesticks. You can go back to your candlestick, then you can enjoy your charts. You can enjoy your charts. So this is going to be the end of this evening's session. This is going to be the end of this evening sessions. If you want me to maybe go back to other charts to analyze the market together with you, I'll just switch back to the previous or maybe the past markets. Then we analyze few ones to see whether what I just explained to you works or not. But then I've just proved to you here right now that it works. So I need your suggestions in the chat box. Tomorrow we are going to um we are going to go into details what trend lines are, how you can draw your support and resistance with trend lines, how to know whether a trend line has been broken, whether it's still valid or not. Well, somebody is saying I should analyze GBUSD, but it's quite unfortunate. I don't do currencies. I currently I only trade synthetic indices. So with synthetic indices, we have volatility pairs, we have step index, we have range break, we have boom crash, but I don't do boom and crash. So any of the synthetic pairs that you know, you can drop them, then we would analyze it. But I don't do currencies as it stands now.
Would 101 is
Okay, so we are already on 101 days. So I should go back, right? I should go back then. We uh we have less than 2 minutes left.
Hello. Volatility 75 1S.
75 one is okay. Okay, so this is 75 one is, but then we have just a minute left. So once this call ends, I'll drop another link. That will be the last session, and then we are not going to spend a lot of time on it. So once this one ends, kindly go back and then join from wherever you join this particular one from. Okay, so let me just jot them down. Uh I have vote 25. I believe you were talking about crash 500, crash 500. So we will be looking at crash 500 as well. Okay, somebody also said V75 and then um 75 1S. Okay, so we are going to look at this space. We are going to look at this space. So we have few seconds left. Once okay, so somebody is asking how do we calculate the lot size in the synthetic? I don't know. I'm not really understanding your question. But then, if you want to get the lot sizes, maybe the minimum lot sizes, the maximum lot sizes, then when you click on the pair or the quotes, just go to properties. You would have everything about that particular quote, the minimum lots, the maximum lots, everything will be there for you to read and then understand. But then if you are talking about maybe the points, calculating points with synthetic, it's some way. Every pair has its own way of calculating it. Step index like this, 10 points with the least lot size will give you $1. But it's different from how you are going to calculate it with 75 or maybe vote 25. Okay, so somebody is asking whether they can use these things to trade on currencies. So you see, with the synthetic pairs mimic the currency market. So the way synthetics are behaving is the same way the currencies behave. So if you have the knowledge here, you can just move it there. But then they behave differently. They behave differently, and then even though you can be using the support and resistance, I believe support and resistance. These concepts came from people who trade currency pairs, uh, who trade currencies or maybe forex. So you can apply the same thing there. But just that forex with currencies, you see, you can't just use the raw charts like that. You would have to include the economic something something, those news that you guys trade. You need to include those things. How can I find this 75 1 SMI? Because I can. So I don't know whether you are using a phone or a laptop, but then if it's a phone, you see when you go to the codes, we have a plus symbol or the cross. You just click on it, the add, you have all the pairs listed. If it's volatility, you just click on it, all the pairs will pop up, then you click on it, it will be added to your codes. Okay, so somebody actually told me he has a way of downloading it. So right now, if you need Meta 5 or Meta 4, it means that you need to get it from somebody who has it. If you are to be in Cape Coast, I have about 20 different Meta trader platforms, about 20 different Meta traders from different brokers, but you are not in Cape Coast, so it will be very hard to get them. But then if you have anybody who has it, you can maybe go to the person and then get it. So somebody is asking if synthetic also obey the laws of support and resistance. Yes, they do obey. But then you can't trade solely on support and resistance. You can't, if only support and resistance, if support and resistance works all the time, I believe every trader would be rich by now because every beginner knows about support and then resistance. But then just that most of them do not understand how to or do not know exactly how to go about things. So how do we calculate pips? So with VIX, with synthetic indices, we don't use pips, we use points. And then just as I mentioned earlier, with synthetics, each pair has its own way of calculating the points. With step index like this, you see with currencies, maybe GBP USD, if you get 10 pips on the least lot, which is 0.01, 10 pips will give you $1, a dollar. And then you know that 20 pips with the least lot size will give you $2, same as GBP USD, same as Euro USD, same as GBP JPY, all the currency pairs. But when it comes to synthetics, 10 points on step index with the least lot size, which is 0.1, would give you $1. But with the same 10 points on volatility, 75 would be something different because the lot sizes are not the same. With currencies, all the lot sizes are the same except when you add the indices. But then with the currencies, they are all the same 0.01. And then some brokers will they will allow you to use nano lot sizes where you can get 0.001. But with synthetics, the least lot for step index is 0.1. The least lot size for Vol 25 is 0.5. The least lot size for Vol 75 is 0.001. For 75, 1s is 0.001. For maybe Vol 50 is 3.0. They differ. So each pair or quote you pick would have its own way of calculating the points. But if you are trading with a laptop, if you are trading with a computer, it's very easy. Once you place your trade, you have your trade, your entry, or maybe a pending order, you have your TP, your SL. Once you put your cursor on the where you've placed your stop loss or maybe your take profit, you would have the points attached to it, and then the amount you are going to earn as profit or you are going to lose as a loss. So when you put it on your stop loss, it will indicate maybe negative, maybe negative 10, and then the points will be attached to it. If you put it on your TP, it will indicate maybe profit maybe $10, and then the points attached to it. Okay, so somebody is also asking how to log profits. Let me write these questions. I'm going to answer all them right now. And then log profits. This is not supposed to be part of it, but then I'm going to do it. Bosu, somebody said he wants me to deposit. Yeah, as you can see, I'm very busy right now. So right after the call, you can just hit me up for me to fund your account. Okay, so Alfred is saying he's also here. I've seen you, Charlie. RCC, Central Regional Minister Alfred. I've seen you. I am sending the XNES Meta 5 General yeah, empty of desktop. Okay, so somebody is saying that he's going to send them, he's going to send us either a link or something for us to be able to download them. So somebody is also asking if I'm going to give strategies. The assignment that has been given to me is to take you through supports and resistance. But then, if you can maybe contact Dr. Captain Chris, if there would be a chance, I can take you through a lot of things. Yeah. So now let me go back to the chart and then show you guys. Where's Meta? So as you can see, this is how my chart always looks like. It's very clean. Indicators do work, but I don't know how to trade with indicators. So my chart is always clean. So somebody was asking the profits. Now let me give an example here for you guys to see or know how to calculate either your profit or your loss when you are trading synthetic. So let me place a pending order here. There's no money in this account, but then let me place a pending order. Let me use this SL limit. This will be my maybe TP my SL. So let me just place an order here for you guys to. Oh, okay, I'm recording. Let me just place an order here. Okay, so the price 239.666. Just leave it. And then volume. So here with 50, the least lot size is 3.0. You can use 3.0 on gold. In the 2 minutes, pressure. So the stop loss would be 247.2, and then my take profit would be 225. Let me just leave it like this. So I've placed my order here. Let me find ways to delete these guys. Okay, good. Okay, simple. Okay, so as you can see, I have a pending order here. So this is a sell limit, and this is a sell limit as you can see here. I have my TP here. Sorry, I have the stop loss here and then the TP here. So if you want to know how much you are going to earn or lose when you pick trade with a laptop, you can simply place your cursor here. So this is the take profit. And so you can see where the cursor is. Profit is 44.00 USD. So if this trade hits target, I'm going to make 44. And then we have the points here. Oh, And then we have the points down here. Let me see. Okay, so the points we have 146,660 points. So 146,660 points, which is giving us 44 USD with the least lot. So divided by 44 USD is giving us 3,333. So it means that 3,333 points on vol 50 with the least lot size is going to give you a dollar. It's going to give you $1. So for you to be able to know all the points and then the amount you are going to earn on them or you are going to lose on them, you can just do these calculations. You do it, you put it down or you jot it, you can paste it anywhere so that you don't have to be doing calculations. But then if you are trading with a laptop, you can simply place your cursor on your TP or your SL and then you have it. So here too, you see we have negative 19 points, 19.2, negative 19.2, and the point we have 6,000, so we have 63,999. So divided by, so divided by 19.2, we still have 3,333. So it means that 3,333 points would give you $1 on full 50 with the least lot size. So if you double the lot size, means you are going to get double of it. Yes, so this is how you can calculate your points if you are trading with a laptop. But then we also have this cross here where you can use it to you can stretch it and then it will give you the points. It will give you the points. And then you see, as I move it, I have the points and then I'm having or I'm getting the negative figures, the percentage. So once you get to know the points, you can just use the cross to mark it before you even place your stop loss or your take profit. And then somebody also asked how to lock profit. So let's take this pending order here as an example. Let's assume this is a running trade. Let's assume it's not a pending order, it's a running trade. And then I picked a sell here. And then currently this is where the market is. Do not forget you can only lock profits when you are in profit. If you are in loss, there's no way you can lock profits. You can only adjust your SL. But then if you're in profit, you can lock your profit. So let's assume I entered a trade here. This is the entry, and then this is the current market. So if I want to lock my profit, I would just come down between my entry and then my where the current market is. That's where you can actually lock your profit. So somebody will say, okay, I want to set the SL to break even. With a break even, it means that you are going to look out for the price in which you entered your trade and the price is here 239.6660. So it means that you are going to modify your stop loss and then use these figures. So it means that when market decides to come back here, it will just hit your stop loss. You're not going to make a loss, you're not going to make profits. But then if you put it at exactly where your entry is, you might end up having maybe 0 point negative 0.02 like some cents. And if you want to have a positive SL where you know that you have a risk-free trade, you've locked your profit, and then should in case market returns, you are still going to have some profit left between your entry and then the current market. You can lock your profits between any of these areas. And then if you want to calculate how much, maybe you are running $10 profits, maybe you want to lock profit at $5, it means that you still need to know the number of points that is going to give you $1 on that particular pair with the lot size that you are using. Then you just calculate it. You just need to do calculation. You can't do away with the calculation. You just have to do maths and then you get it. So this is how you can actually lock your profits. This is how you can lock your profits. So let me go back to the chat box to see if there are more questions. Okay, so Prince Amponsa has posted MetaTrader 4 and 5 in the group for us. Thank you so much, boss. So you guys can go and then download it. Somebody is saying he cannot see my screen, but then um maybe it might be your network because I'm sharing the screen and then I'm recording as well. Okay, so since there are no other questions, let me ask if Mr. Chris, are you still on the call? Let me hear from you if you're on the call.
Yeah, I'm on the call 24/7. I
Okay,
do.
okay. So let me analyze few pairs that they dropped in the chat. Then I'll leave the rest to you. So now let me start with Vote 7. Sorry, Vote 25. Somebody mentioned Vote 25, so let me just go to Vote 25. Uh, and I believe you guys saw the screenshots I posted on the in the group. I've been doing it on a daily basis. It's a regular thing. Okay, so let's mark out few supports and then resistance. And then just as I said earlier, you can choose to switch from candlestick to line charts. You can choose to switch from candlesticks to line charts. And we know that if you are using, okay, since we've not started trend lines yet, let me just ignore the trend lines for now. Let me just ignore the trend lines for now. Let me just ignore the trend lines for now and then mark few ones over here. If there's anything you do not understand, you can put it in the chat box. And then if you also don't agree with me on something, you can still drop it in the chat box. Okay, so here you can decide to use just this line, or you can use a zone like this. So you know that whenever market enters the zone, you can have an entry over there. You can have an entry over there. You can, okay, so I can, let me just use the zone for this one too. So now I've marked these ones. Let me switch back to the the candlestick. So if you are using the candlestick, you see when I switch back to candlestick, you see where the zone is right now. You can see where the zone is right now. Where the zone is right now. And then let me use this. Okay, so this is where markets. Okay, so now let me explain something here for you guys. You see, we are with the candlesticks right now, and then if you want to pick a trade, if you want to, let me go back to line charts and see something. Okay, so if you want to pick a trade, you switch from candlestick to line charts, and then you have your zone drawn over here. You have your zone drawn over here. So you have the zone drawn over here. And then this is the reason, one of the reasons why I said you can't only or solely focus on maybe using the lines. So support and resistance, they are not just lines, they are not just levels. You can have zones in them. So once you have the zone, it means that whenever market enters the zone, you don't wait for it to maybe touch a line or a level. Whenever market enters the zone, so let me just expand this. Let me expand this. So you see, market still obeyed this zone. It still obeyed this zone. it was moving here. So whenever market enters the zone, you can buy or you can pick a buy trade here. It's entered the zone. So anywhere within the zone, you can actually go for a buy. It came to hit the tip of the zone. It came to hit the tip of the zone. And if you are trading based on zones, if you are trading with zones, maybe a resistance zone, a support zone, demand zone, supply zone, there is a way you can trade with the zone. You can mark the beginning of the zone 50%, 80%, and then at the end of the zone. So if you are trading and then maybe you are trading with both 75, maybe 0.005, you can divide or share this 0.005 and then split the entries. You don't put your entry at one particular price or area or maybe one particular level. You know that you are trading based on a zone, and then you know or you also know that when price touches the tip of the zone, it can go back, and then if it enters to it can, so anywhere within the zone you can pick a trade. But then you also need to make sure you are on a safer side. If you mostly pick it at the tip or the beginning of the zone, it means that you are going to risk more. So you can actually calculate 50% or 80%, then you pick your trades there. I don't have enough time to explain these things, but then if should in case I get another time after this particular after support and resistance, I can go deep into this, how you can divide you can split your lot size for your entries, to have your stop loss, to have your targets. If I have, should in case I get another chance or time, I would explain into details. But for the sake of this particular session, let me put that one aside. So you can draw your zone, and then whenever market enters the zone, you buy or sell. So I have the line chart here right now. I can just switch back to candlesticks, and then you see market came here and we have wicks over here. So if you're not careful, you'll be saying that, oh, there has been a breakout. Meanwhile, the breakout was a fake one. So if you're not careful, you pick a trade based on a fake out, and then at the end of the day, you are going to make a loss. So this is on a lower time frame. So it came here, it went up, and then we had our resistance over here. It came all the way down, and then it also respected the zone at this particular area as well. It respected the zone at this particular area as well. So if you want to take the resistance into consideration, let me just go back to the line charts, and then you see we have let me move it to the tip of it. Okay, so I have it at the end of this.
We talk, then you made the one, another down. No, I felt that down. Not down.
Please mute yourself. Please mute yourself.
No. Oh, sorry.
No problem. Okay, so I have another one here. But then if you want to also use the line, you can just choose to use the line. Once you've switched from candlestick to the line charts, at least you are a bit safer. So you can just put them here, and then you switch back to your candlestick, and then you get it. I have this. Let me go to step index before I go to the other pair. Let me go to step index to see the current market, and then we are going to draw this, and then I'll put the setup in the group for you guys to follow whether it will play out or not. Whether it will play out or not. So let me switch back to so let me just use this. It's crossing, it's already crossing, so there might be a breakout. There might be a breakout. But then if there is a breakout, you are still going to see it here. If there is a breakout, you are still going to see it. But then if you want to confirm the breakouts, you need to go to the candlesticks and then follow the steps I gave you. You need to make sure the candle is full, it closes below either your support or your resistance, and then the next candle should be smaller, a bit smaller, and then it should also close below the candlestick that broke out either your support or your resistance. Either your support or your resistance. So I don't think this is going to hold, because even if I move it downwards, the market is already crossing it. Market is already crossing it. Yes, so it has already passed. So I don't believe this is going to hold. So market might break this one, but then we still can't confirm whether it will break it or not. We can only wait for the breakout to occur. We can only wait for the breakout to occur. So we can just have our zone here. If you want to, if you want to use the line, so you can just put the zone aside. Then you mark with the line like this. Then you wait to see whether there would be a breakout or not. Whether there will be a breakout or not. So I'm going to save this and then I'll post it in the group for us to follow. I'll post it in the group for us to follow. Uh, okay, so let me answer a few questions. We have a few minutes left. So somebody is asking a strategic in trading with crash, with boom and crash. Dr. Captain Chris is an expert, so I believe he is going to do that. Somebody is also asking how you can calculate. So I've already explained with the amount you can make, the amount you can lose. After using higher time frame, example H4 and indication indicate that is going to buy, but when you look at the smaller time frame, market is moving to sell. Okay, so somebody is saying that you can look at maybe H4, market is buying, and then on a lower time frame, market is selling. I already explained that we have trend within trend. We have trend within trend. So let me just use this as an example. You see, market here, market was buying, right? Market was buying. Let me go back. Which okay, so this is H4. Let me find another one. Okay, so let's consider this whole area. We can say that market was in a downtrend from, so here we can say that market was in a downtrend on the H4. But then markets moved all the way down here and then it went up. So here, if you straight to a lower time frame, this is a very strong uptrend. This would be a very strong uptrend. So that's the reason why on a higher time frame, maybe you can have a sell, and then on a lower time frame, you would see a buy. So anytime you're analyzing the market, I already said that you need to look at the bigger picture. And then for you to get a bigger picture, you need to switch to the higher time frame, and then the higher time frame will give you the bigger picture. So after analyzing your pair, the pair on a higher time frame, then you can switch to the lower time frame to find entries. Whether the lower time frame is also still in that particular direction that you want to go for. If it's in the opposite direction, it means that you need to wait for it to play out before you go for your main trend. Before you go for your main trend. So please, how do I get TradingView on synthetic? So you can just go to tradingview.binary.com or tradingview.deriv.com. Some of us don't understand some of the terms being used. Whoa. So I've explained a lot of the terms that I use, but then if there are terms I use that you do not understand, you can just go to the page, you type them there, and then we are going to help you understand it. Somebody is saying he can't hear my voice, and I believe it's at your end because other guys can hear me, other people can hear me. So I believe it's from your end. Okay, so on vote 25, somebody mentioned vote 25. If you want to use a trend line, you can draw something like this. Let me switch to there. Okay, so you see, I believe you guys are seeing how the how do you call it? The line chart is working here. So let's assume say, or let's just say that market hasn't returned back. So this is the first touch, another touch. So we don't know whether it's going to respect it. But then let me just move it from this particular one to the next one. So it touched here, it went up, came back to touch here, and then here, even though it didn't touch, but then it went closer to it. But if you switch to candlesticks, you see the candles are just entering the lines just like that. But when you switch to the line chart, this is where it crossed the line, and it's very clear here that there was the market was able to cross the line, the supports. And then, okay, so let me explain this. Here, another person will say, you see, this was a breakout. Somebody will say this is a breakout, a red test, and then you're supposed to sell, right? But just as I said, it's not always like that. In some cases, there will be a breakout, and then you see something like this as a red test. You go and sell, and then you end up losing. You end up losing. So now let's come back to the candlestick. So when you switch to candlesticks, you see this candle, as I explained, this candle crossed the line, the support, even though it closed below the support. It closed below the support. But then when we go to the explanation I gave, I said that after the breakout or the break of the candlestick, when the candlestick crosses the line, that is not a confirmation for you that the support has been broken. You need to wait for the next candlestick to also form and then close below the close of the previous candle. It should close below the close of the previous candle. So this was the close of the previous candle. And then look at where this particular candle closed. It opened here and then closed here. So it means that a fake out occurred. And then the next candle also closed it. But look at the candle that formed afterwards. It went up. So if you understand these things, I don't think you will be telling people that maybe a broker is manipulating the market. If you do not understand it, that's where you go around telling people that Charlie, the broker is manipulating the market. It's just that you've not consumed certain information, so you do not understand certain things. So I need to give Captain Chris the remaining of the time. We have just 3 minutes left. So Captain Chris, if you are here, you can please take over. And then tomorrow when we meet, you are going to go into details what trend lines are, how you can draw trend lines.
Okay, guys. We are grateful for our tutor for taking us through the support and resistance advanced level. You could see, as I told you, when we say we deliver, and when you come, you will see there is difference between what you know and what you are adding up. And moreover, as we said, and we keep saying, whatever that we will be doing is just to help you. So if you are good in whatever that we are teaching, you can also add up. As he was teaching, I was going through the messages. Some are also helping, some are also pushing. The best opportunity is what you have gotten. Ride on it. Make sure 2023, God willing, once we are able to enter into that zone, you should become a professional trader. You should be professional and be independent. Be independent in your life. Don't think about government. Don't think about if I don't get, I will die. This opportunity has been given to you freely. Once again, we meet tomorrow, same time, the same year. Please share the link. Ghana, there's one of our pastor called Pastor L. He will tell you, share the link, we'll share the link. So we'll share our Telegram link and join yourself so that at least the target is to train 1,000 people. Now we are 440. At least let's move to, by the end of the year, let's move to that 1,000, and then you'll be cool to go so that we know that at least we have trained that 1,000. If next year we'll bring the opportunity to let you know. In between these teachings, we will share business opportunity. In addition, as I speak to you now, there is one company in Nigeria who just contacted me within 2 days, talking about a business opportunity. I will not see outside. It is you people that I will share with you guys. So keep coming to class. By the end of it, we will share the good news so that you see how best we can be getting small money in addition. Thank you, thank you, thank you, Chris Dollars, the Grand Master himself. Good day and good night.
Thank you so much, boss, for the opportunity.
Thank you, Prof. And we are so
Thank you,
grateful.
boss,
So
for
grateful.
coming. Thank you.